Hello everyone, this is Evan here from the Trade Risk on Wednesday, November 30th with a midweek market recap video. We're going to cover all of the major markets, sector analysis, and then finish off with some individual names. We're going to jump right into the video today. S&P 500 SPY ETF closing down 24 basis points, 0.25% here on the day. But first, today was the last day of the month, so let's take a look at those monthly charts. You can see here S&P SPY ETF, nice bullish sort of breakout bar, two all-time highs this month, and that was after being as low as 208 just a couple of weeks ago before we saw this big rally kind of unfold. Now, the other kind of point out here on this chart is July we broke out to all-time highs in the S&P, and then we spent 3 months consolidating, came back, retested, and actually undercut the old 2015 highs and springboarded, sort of launched higher off of it. So very bullish constructive action here for a longer term structural standpoint. We had the breakout in July, we consolidated that breakout, we retested the breakout area, and then we launched higher. Certainly sounds easy in hindsight, but it was tricky, particularly on the days leading up to the election and the event risk and trying to get on board quick, so on and so forth. But in a bigger picture, you can see kind of what went on here and how good looking and technically sort of bullish this trend looks from the monthly perspective. So SPY up 3.69%, IWM up a massive 11% this month. You can see a similar situation. I mean, it's a breakout to all-time highs. But prior to this month, however, we were not at highs. So this was the trigger month that got us there to all-time highs. This is a new breakout. Trend is higher. Everything looks good. MACD rising up. So everything you want to see there on the longer-term picture. And the Qs, you can see still consolidating, right? We broke out to all-time highs back here in August, and then we've moved sideways, haven't done anything wrong, but we just haven't been able to actually get that traction, get that follow through to the upside. So you can see here this 113 level is going to be important for the Qs to hold on to. You don't want to see us kind of roll back over, back below the 2015 highs. Then you have that sort of potential where, this was a false breakout, potential trap, but until that happens, let's not try and get too ahead of ourselves. This picture here is still bullish when you zoom out, and we just really need to see how this range resolves itself. And it's only a 6-point range, so it is pretty tight in here for almost 4 months of trading. So it'll be certainly very important to watch the upper and lower bounds there heading into the end of the year. Now, getting into a more tactical daily view, let's go back to the SPY chart. On the daily chart, you can see we made an all-time high here last Friday. This week, we came in with some soft action, closed on the lows. We bounced back a little bit yesterday, and then today we saw a nice gap higher, but it was faded and we closed on the lows again. Notice today too, we broke out, made a new intraday all-time high, but that was sold and we closed on the lows. So bears will hang their hats on this short-term sort of win right here. If you want to be short, very tactical, you could certainly be putting your stop against today's highs, looking at this failure to hold the new all-time highs as a signal to get in. Where it goes from here, though, will be interesting. So at the very least, right, we're starting to see us break this accelerating trend line that we've been in, that we were in for about 2 weeks, as we just sort of levitated higher. Now you're starting to see, okay, we're actually starting to consolidate a little bit. We're still above the 8 period. We still have a lot of momentum on the upside, but momentum is weakening. So consolidation, rotation, maybe a little bit more chop in here. That's sort of the theme of what to look for the rest of this week. You have your upper level now where we've been in where we've basically failed to take out these highs here at 221.50 for a few days now. So you have your kind of short-term line in the sand on the upside, and then on the downside, you have yesterday's lows. Then you have the 8 period, you have the 20 period, and you have some, moving averages or some of those dynamic indicators that you can use. But for now, things look healthy. A little bit of rotation. Maybe you can ease off the gas. If you've been heavily long, you can sort of peel some back, trail those stops, trim some profits. That's what we've been doing. We're the lightest that we've been throughout this run right now. Still have long positions on. We still want to participate, but we're easing off. We're just kind of waiting for the market to sort of settle in here, and we're going to look for some individual stocks and sectors to kind of pounce on when the opportunity presents itself. So that's the way we're looking at it. Still very bullish, but we're just respecting here that there could be a slowdown and a period of at least catching breath for the market, which again is certainly a constructive constructive behavior. IWM, very similar situation, right? We had this massive, almost record-setting run to record highs here, consecutive highs, and now we've seen 3 days of basically pulling back, a little bit of consolidation. You can see we closed right at the 8-period EMA here, so again, very constructive. You want to see this just cool off a little bit, measure the pullback, see how deep we can get. 129, that was the all-time highs back here from 2015. Perhaps we want to come back down there and retest that over the next week or so. Still be very healthy. And again, similar comments to the SPY. We just want to keep an eye on things and see how that all shakes out. Finally, the Qs. This is where a bit of the concern was, and the Qs looked promising here over the past couple of days, even yesterday with a little bit of outperformance and trying to make a run for these highs. You can see the topping tail there did get faded, but still started to look pretty constructive here at the top end of this range until today, where you actually saw some support broken, the past few day lows, that taken out, closing on the lows, minus 1%, over 1% to the downside. Not something you want to see at the top end of a range at resistance. That indicates, perhaps we're destined to kind of come back in here and fill things out, move sideways some more. So we talked about that from the monthly picture, right? We've been in this range for 3 months, and right now it looks like we're staying in this range as we head back to the midpoint. So Qs definitely still the laggard here when you're comparing between the small caps and the S&P 500. And again, if you want to actually look at the composite itself, NASDAQ composite entirely, you can see we did break out to all-time highs here just over the past couple of days again, and we're coming back in and retesting that breakout level. If we start to really fall below this and come back into this old range, again, that's where you have to be a little more concerned. So you get a mixed sort of picture right here, but again, I think the glass is still half full. Benefit to the bulls until proven otherwise. NASDAQ, though, composite, a little bit weaker than the rest. So with that said, let's get into some of the other major markets here. TLT still struggling. We have this line down here with the prior January lows. You can see it's trying to catch its footing. It had this nice 3-day bounce off of this reversal day, this November 23rd reversal, and then we got a 3-day pop. First 3 days to the upside consecutively in over a month. You have to go back to sometime in here, mid-October, early October, before we found 3 days higher, but that was broken today. Couldn't get to 4 as we had this kind of brutal gap down. But, we didn't get a complete rollover, right? We didn't take out this November 23rd low. We actually tried to hold in there, got faded a little bit towards the close. So we'll have to see, is this a choppy sort of stabilization range that we're going to carve through, or, do we have more downside to go? Today being the last day of the month, perhaps there were some flows just by funds sort of squaring up and getting their positions looking as good as possible on the books, which in that case could be just the unwind that you see in TLT, not wanting to have that shown. We'll have to see again, it's momentum to the downside. You can see the MACD diverging a little bit, so we're slowing on the downside, but we really need to just get a couple of days of holding in there and some more sort of filling before you can get too constructive and happy to sort of catch this falling knife, at least the way I look at it. USO was the big news today. We had the OPEC meeting, supposed agreements to cut supply, cut production, and market responded favorably. USO up 8.65%, one of the biggest moves here in some time. And you can see we have a bit of an island day that was created yesterday. Granted, this is the ETF, and crude oil is trading more so around the clock on the contract. Still, this type of action and this type of behavior is usually a pretty good setup here for more reliable sort of short-term bottoms, pivot lows, those types of things. So for now, 8.65% to the upside looks good. We're back through the midpoint of this range and perhaps going to head back up here to tag sort of the September and October highs. Certainly in motion. Let's see if these gains can stick. But certainly, the long side here looks good in the near future. UNG also continues to work. It's staying pretty resilient here after this sharp kind of move lower, and then it's been now retracing this up almost 40-50% of this down leg, starting to look pretty good. We did have some previous supply in here right around $8.60 in the ETF, so just be aware of that. But UNG continues to look and act pretty healthy, pretty good on the long side. And then finally gold, which we tried to play a reversal in this. We got stopped out back here on this day trying to play this reversal. Didn't work so well. This continues to sort of unwind here into the end of the month, and it's been a pretty sharp move lower, and for now it looks like momentum is still to the downside and still in favor of the sellers. So you got to be careful here. You got to be in and out quick if you're planning to try and jump in here for a quick little reversal trade, mean reversion trade. Otherwise, you just have to wait for this to really sort of settle up and stabilize a bit more. So for now, sellers in control. Silver holding up better, a little more resilient, right? Not breaking new lows. It's actually hanging out sideways. The lows here from last Wednesday are still on the table here as holding. That is constructive. Again, you still have momentum and sort of the structural trend now lower, so you have to be careful there, but it's doing it's doing what it needs to sort of stabilize. If you can get back above 1580, 1590, start clearing some of these highs, might have a little bit of a retracement that you could start to put in there in silver. Getting into some of the sector analysis, XLE, without a doubt, these were the big movers today. Of course, this is on the heels of that OPEC meeting, and a lot of these stocks just really ripping to the upside. Some big gainers there underneath the hood, but XLE, continue to just kind of grind higher here. Hasn't been an easy, clean trend to the upside. It's just a lot of back and forth. It's a range that's just tilted a little bit, and it's just been grinding higher in that little channel. So finally getting a little bit of acceleration today. Let's see if that can actually continue to hold and a more meaningful, faster trend develops, or are we just going to be back and forth in this kind of zigzag formation? Regardless, XLE working today, materials working today, making new highs here, looks good for that group. IYT continues to work, faded a little bit, but still, all things considered, holding up pretty well, up 0.5% on the day. And industrials, again, faded a bit, but still trying to hold up and continue to perform despite, defying gravity and continuing to just work itself higher. On the downside, it's kind of an equilibrium here. We got XLU, which got pummeled today, and it had a pretty nice looking meaningful 3-day rally over the past 3 days, but it just gave it all back, just about all back in one day. So again, still sort of the hallmark of this downtrend. It's still making lower lows, lower highs. Got to be careful here, and it's now back below the 8 and 20, which was just getting ready to curl back to the upside. So more patience here is required in XLU. Staples, very similar situation, was up the past few days, and then it gave it all back and then some in the staples. And finally, XLK, like we discussed, and this one, we wrote about this on Monday as the sort of potential breakout rotational candidate. It started to look good here Monday morning as we were up here near the highs. It ended the day off of those highs, so it gave you a little bit of pause. Same thing, it came right back Tuesday, tried to break out, failed at Monday's highs, and then closed lower. Never really gave you that confidence to go with the breakout, and then you saw the sharp move lower, rejecting those highs at the top end of a range. That's not what you want to see. You don't want to be buying that breakout. This is a good spot to certainly, of course, try and play some mean reversion back into this range. So, what tried to get going here and failed twice to do ended up resulting in a fast move in the other direction. So you still need to be patient here. If you're a bull in technology, it's still prudent to be sort of sidelined and waiting. Now, speaking of technology, let's get into some of those names here. Apple continues to hang out here. Actually, with respect to some of these other counterparts here in the Qs, for example, it's actually trying to hold up here at these recent highs. 112. This was prior support here in September. We're bumping up against it now. It's resistance at this point, trying to cut through that supply. And if you're a bull in Apple here, you want to see a move above these recent highs. You get a cluster of them here, so you get a kind of a momentum spot that you could look at for a breakout. That's the level to be eyeing there for Apple. Google, bit of a rollover here, tried to get going above this 790 level a couple of times, particularly Monday, Tuesday, failed, and just like the XLK looks like, we had the sharp move lower today. You can see there is some support here. This is where we kind of found some buyers to step in here right around the 775 level. If we get follow through tomorrow, course, then it's kind of all bets off, and you have to start to look at the lows here back from the 14th to come back into play for a potential retest if we get that follow through move lower. If we get some type of pop tomorrow, then again, we're just carving out in a range here from 775 to call it 795, and it's still just kind of a wait and see. 8 and 20 are down, and this level's a big level, right? Go back to multiple years, and you can see 790's played an important role. So it's going to be very interesting to see how Google ends up sort of resolving itself. Facebook, same thing, right? Tried to get going the past couple of days, couldn't, and then we saw this kind of knee-jerk move lower. Facebook, a little more sort of a bearish picture here. The trend is now starting to very clearly depict here on the short side. You get this open gap from earnings. You get a series of lower highs now that are getting put in here. So a little bit more concern in Facebook, has more to prove. Granted, you could say this is some type of inverted head and shoulders that it's kind of working out right here. Maybe that is the case, and maybe higher prices are to come if we can start to get back above 122. But for now, you have to be careful with it. It's pretty vulnerable, and it's got to prove itself at this point. Facebook, I wouldn't want to be trying to dip by at this point. Amazon. Let's see if we can get the chart up. Amazon, kind of similar, right? And it's got that same kind of inverted potential look there. If you start to use that as the neckline, or I'm sorry, the shoulders, head, right? So Amazon, though, again, just like Facebook, you got the 8 and 20 lower, and almost got the curl over because it had a pretty sharp bounce back into prior to Thanksgiving, but just giving 40-50% of it back at this point, still kind of vulnerable. You got to be careful here. If it can start to get back above 790, that would be more meaningful, that it could actually take out resistance, take out one of these pivot highs, and kind of reverse the sort of the mess that it's in right now. That's what I would like to see there in Amazon before trying to be a hero. Microsoft, we put out a post on this one just yesterday. This is the most bullish one, right? If you want technology, you want that exposure in large cap tech, Microsoft's sitting right underneath all-time highs. This is definitely the most constructive. You can see above the 8 and 20. It's still hanging up here. Had a weak day today, but if it can start to get closes back above $61, suddenly it looks pretty good again. So pay attention to Microsoft. It's on my radar, no position, but that's what I'm paying attention to if the Qs can actually start to firm up. And that should do it. Actually, let's talk Twitter, because I know Twitter had a pretty good day today. Not bad. Still kind of an interesting formation here. Is in this channel. It kind of broke down from it, and then it very quickly stabilize. So it's just kind of hanging out here. It's very messy. It's got to get above this, at least $19. Once it's above 19, I think that gives the bulls some breathing room. And then ultimately this 19.50 to 20 zone, if it can start to get above here, that's ultimately the goal there for all the Twitter bulls out there. You can see the weekly time frame, 8 and 20 are very just flat right on top of each other. So it can kind of go either way here. Nice day of resilience today, given the sort of damage and sort of technology names. But we'll have to see if that strength continues into the rest of the week, into the rest of the year. So let's end it there. Hope this video helped. As always, thank you guys for watching, and I will talk to you soon.